Good morning, everybody. Hope you all are having a fantastic Monday. We're going to be back with our weekly Southwest Florida market updates. I'm going to get back to this once a week doing this live stream. So today is September 15th, Monday. Every Monday, come on here, 15-20 minutes, just give you guys some information, what's going on around here, market conditions, market updates, just all that good stuff. First thing I just want to show you guys temperature. So we're starting to get a little bit of that fall breeze coming in the mornings today. Right now it's about 85 degrees. Typically, like, a couple months back around this time, we'd already be in the high 80s, maybe even, like 90 or something. So definitely been feeling a little bit nicer. We're starting to get that, slight little cool weather that we're looking for in the fall. Hopefully that means hurricane season is going to be coming to an end here soon. And then, like I had mentioned, just that nice cool weather, get out of that heat. We'll go over the market stats in a minute. First thing I want to talk about, mortgage rates are appearing to go down pretty substantially. So there's a lot of talk at the Fed here within the next week or two of actually dropping the rate there. So the cost for the government to actually lend money to people, to those banks, those big institutions, those kind of things, that they were going to cut the rate there. The 10-year Treasury, though, is kind of what we watch to determine that actual this 10-year yield right here for the 10-year Treasury bond. So this is actually the bonds that they sell, what people are actually willing to pay for the bonds. So as you guys can see, like a couple weeks ago, here in August, they were talking about potentially rate cuts. However, the bond market was still going up, so people were thinking, hey, even though rate cuts are coming, that potentially doesn't signal a great economy, so we're still going to bid up the price of these bonds. However, we're getting rate cuts from the Fed, we're getting these bond rates going down, we're also getting these mortgage rates going down, so hopefully here soon we're going to start seeing some pretty good relief here on this mortgage side. I'm going to show you guys real quick this 30-year fixed mortgage rate. So for the most part, this whole year, ever since the end of 2024, right here, this is showing October right here, 10/10/2024. So the average mortgage rate was about 6.62%. That was when we got a really big spike from down here in September. September of last year, we had a little bit where rates were lower as well. However, for the most part, this whole past year, we've been, around the sixes, high sixes, mid sevens, low sevens. Now it looks like we are getting some relief. So if you've been thinking about buying, if you've been thinking about selling, I know a lot of sellers even are just kind of at a standstill right now. They don't want to give up their low rate to, buy something new with a higher rate. So definitely something for everyone to just keep an eye on, whether you're just looking to sell and cash out. There should be a bigger buyer pool coming in. If you're looking to buy, your affordability is going to be better because that interest rate is going to be lower. And then, like I said, if you are one of these sellers that does have a mortgage payment and you are looking to sell, be able to get into something else, now's the time that you can start to do that. It makes more sense to give up a 4% rate for a 5.5% rate than it does to give up a 4% rate for a 7% rate, for instance. So like I said, we're going to keep an eye on this U.S. 10-year yield chart over the next couple weeks. Hopefully we start to get some, settling out here in this mid 3% range. In 2020 during COVID, it was basically 0.65%. So it was basically the bond market. Bonds were just free, but throughout history, this bond has been right around 1.7, 2.5, to at the high 3.2%. So hopefully we start to break back into that, general range of 3 being high and potentially even, that like 1.72%, like I said. That's going to play into effect on the mortgage rates. This is how the banks are, creating that spread. So if they can get 4% here on this 10-year yield, they're going to charge, a 2% spread, for instance, for taking the risk for the mortgage. So that's kind of where these numbers are coming from. Next, let's check out some of these actual market stats. So this is going to be comparing this line chart right here. Let me make myself a little bit smaller. Oops. Basically just going to be comparing, I'll put myself up here. There we go. Just this line, each of these points is going to represent a data point on the chart, which is going to create the line. So as you guys can see, for the most part for the last year, median sales price has been holding within this range. The lowest that we saw it was actually last week at 325,000. This is going to be for single family homes, condos, multifamily, basically all residential. This is what we're including in this. So we're going to want to watch this 325 level to see if we continue to see 330, 325 if we're going to start making new lows and prices are continuing to drop, or if we're going to rebound back into this range that we were in of around 340 to 380-ish. Closed sales are, I believe they're up a little bit from where we were in October, but they're actually down recently. So we've been getting we had for a while listings were dropping, pending sales were up, and then closed sales were up as well. As you guys can kind of see, for the past couple weeks here, we got a pretty good spike at the end of August. It was looking like things were starting to level out. However, the past 2 weeks, September 6th and September 13th, both of these weeks closed. Only 163 sales were completed and only 152 sales were completed. This is definitely something that we want to keep an eye on. There were more listings than that for sure. So if there's more listings than there are properties selling, we're going to get more inventory. Sellers are going to have to start dropping prices to find these buyers. So hopefully we start to see some more buyers start to enter the markets. Sold price per square foot, we're right about 204, but as you can see, pretty much for the most part this past year we've been going down. So we're kind of figuring out that bottom level to where everything's affordable with current rates and current prices and all that good stuff. Percent of list price received, this is going to be a good one to know for sellers as well as buyers, just what the average discount that you can get off of the house is. So if you're going to be 100% of listing price would be paying full listing price. So this is showing you're getting about a 5% average discount from listing price. So whatever you see listing price as, you should be able to put in your first offer, maybe 10% less, kind of meet in the middle there at 5. But this on average is showing that about you're getting a 5% discount off of listing price. As a seller, obviously we want to be within a competitive pricing range. However, this is something to keep in mind as well, just that obviously in this market buyers are going to be wanting at least 5% off of the listing price, maybe even asking for potentially more, so price in a little bit of negotiating room as well. But like I said, ultimately you still want to make sure that you're within that price range that's going to be drawing attraction, drawing interest, and getting motivated buyers to see your property. Percent from list price received, I believe that this is going to be the same. Yeah, just a 4% drop. Percent from original price received, this is going to be interesting one as well. So basically this is the original price that the property was listed, not counting any price drops. So listing price is going to be the currently listed price. Original price would be the original price that the property was listed at. So let's say you listed for $300,000 and you dropped it to $285,000. That would be a 5% drop there. And then if you ended up getting only $270,000, that would be another 5% drop. So that's where they're kind of getting that numbers. So basically it seems like on average listings are starting about 10%-ish too high, are having to drop a little bit, and then ultimately are ending up closing about 5% less than listing price. Percent closed above list price, we really shouldn't get many of these, but this is actually kind of interesting to me. This has gone up in the last couple weeks, so this does show that if you do have a really good house, if you've got something really affordable, if you're creating, a bunch of interest with pricing, prep, promotion, the 3 Ps that we're really big about, if you are generating multiple offers, buyers are still willing to outbid each other. They are still willing to go over listing price to pay for stuff. Also, if, potentially new constructions, fresh things on the market, some of these could be, a percentage above listing price with a credit kickback or something as well. But it's definitely seeming like, as long as you're pricing right and you're still creating that interest within the first couple weeks, you're going to have buyers, you're going to have activity. There's still a percentage of properties closing above list price. Granted, like I said, some of these could be, concessions and kickbacks and things like that. but then also some of them could just be that the promotion, and presentation, creating all that interest within the first 2 weeks, and then getting those sales. Percentage of cash sales, this will be interesting just to check out. It's actually going down a little bit, which is pretty good sign. So over the last year, for the most part, we've been hovering right around 40 to 35, peaked here at 43% in June, all the way back in April. Almost like half of all sales were cash sales. The fact that this is going down does show that more financing buyers are entering the market, more, traditional home buyers, people that are going to be, financing, conventional, FHA, whatever the case is there. So this is, showing that listing prices are getting more affordable for people, mortgage rates are getting more affordable to people, so the average buyers, re-entering the market. Closed days on market. This is, or days on market for close. This is going to be average days on market for closed properties. This is showing 65 for the most part. Over the last year, this has been increasing. It did go down a little bit in August. There was a good bit of pending and sold sales then. However, it's gone back up in September. So this is just going to be really big about making sure you price right in the beginning. You don't want to be one of these ones that's having to drop your price, sit on the market for a long time. If you want to beat this days on the market, you got to create a really, really nice listing. You want to create really nice presentation. You want to create a really nice create excitement from the beginning. So just make sure that everything's presented well. It's priced in accordance with sold comps, factoring in all of your upgrades, updates, anything that does need work, and coming up with a really, really good pricing there. In terms of a buyer, this is going to be good for you. Houses are sitting on the market for longer. You're going to have more options. You're going to have less, urgency to like, hey, I got to make a decision yesterday. You're going to have, like I said, more options, more negotiating power, and then just more, power to you at the end of the day. List to close days. This is probably going to be similar to what we just looked at. So this is how many days property's listed until it ends up closing, rather than just going under contract. New listings, this will be something good to check out. So new listings are looking like they could potentially start creeping up. So this is definitely something that we're going to want to keep an eye on over the next couple weeks. It appears ever since January, we got a spike in new listings. Those listings kind of trickled away throughout the rest of the year. However, it does seem that, sellers are knowing that season's coming and potentially mortgage rates are dropping. The market conditions are improving a little bit. So we may see listings rise again here at the end of the year. Hopefully we get, the pending sales and the sold sales to account for that. Otherwise, we're going to start seeing, a lot more price drops and a lot more price corrections and more affordable houses, just because we're going to have a supply and demand problem. Percentage of distressed listings, 0.6%. So that's not terrible, but it's definitely up from like some of these times. So it seems like some of these people that bought within the last year or two potentially are upside down and are having to short sell, things like that. New pending sales, this is definitely one that we want to check out. So this is going to be the new sales that are going pending. So we kind of want to think about this in reverse of that listings chart that we had just checked out. So we want to see this, if the listings are going up, we want to see this also be going up as well. So we want to see the pending sales, to see like a balanced market, we want to see the pending sales be very even with the new listings. In a buyer's market, we're going to see the pending sales be a lot higher than the new listings. And then in a seller's market, I said that backwards. In a buyer's market, we're going to have a lot more listings than we are pending sales. And in a seller's market, we're going to have a lot more pending sales than we are listings. So there's more listings on the market than there are buyers. We're in a buyer's market. Buyers have more options. That's, more what we're in now. And then when we're in a seller's market, we're going to have more pending sales, less new inventory coming to the market. So the sellers are going to be in the hot seat. Right now, if we kind of go back to this new listings, if these new listings are rising, we really want to be seeing these new pending sales rising as well. These are kind of in relation to each other within the last couple weeks. You see these two big drops, and then just kind of a slight trickle. But these new listings do appear to be ticking up, like I had mentioned. So we're really going to want to see these pending sales be ticking up, not down. If we start to see this going down, we're going to see another probably wave of price drops, a new more listings on the markets, just more listings than there are buyers. So in order to find a buyer, you got to offer incentives, you got to drop your price, you got to optimize your presentation, your promotion, all that kind of stuff. But like I'm saying, in order for a balanced market, we're going to want to see these very even with each other. Active inventory on the market. Now this is just going to be total number of listings that are active on the market. This is pretty cool. So we're down all the way to 6,600 from in January to April. There was like almost 10,000. A lot of these were what we refer to as phantom listings, to where they weren't phantom listings, but it was people who were very unrealistic in their pricing. It was people who were like, hey, my neighbor sold their house in 2022 for $850,000. Yeah, it might only be worth $650,000 now, but if they want to pay $850,000, I'll go ahead and sell it. So like it was people that were listing their house at like crazy high amounts that weren't really negotiable. They didn't really need to sell. It was just kind of like, hey, if someone wants to buy this house for this crazy price, I'm willing to sell it. But it wasn't like anybody that had a real motivation, a real need, or anything like that to sell. So it definitely threw our stats off, considerably. But now you see here, we're back down to that 6,000-ish active inventory on the market. So all of these sellers are people who do want to sell. They've got some real motivation. They should be more in line with current closing pricing, and we're not going to be seeing those people that are listing way over market value and unmotivated sellers. Supply of inventory. This is where I was kind of referring to with those pendings versus the new listings. So seeing those pendings go down and the new listings go up a little bit, the supply of inventory went up. We're going to want to see those pendings increase and the solds increase to make up for the new listings that are coming to the market. Otherwise, we're going to get a lot of supply, and a lot of supply means a lot of options for buyers, a lot of asking for discounts, credits, concessions, that kind of thing. So not a great market if you're a seller. Great market if you're a buyer. So if you guys are looking to buy, if we get interest rate drops, if we get high inventory, if there's high inventory and rates are low, you guys are going to be able to get great deals. You're going to be, great low starting interest rate. Plus, we're going to be able to negotiate money off the price, closing cost credits, concessions, rate buy downs, all that kind of stuff. So if this continues to go away from this balanced market range, the buyers are really going to be the ones that benefit from this. Like I said, with those lower rates, lower cost of properties, more concessions, more price reductions, that kind of thing. So if you're a seller, you're really hoping to see this supply drop. You're hoping to see more pendings, more sold, less contracts falling through, and just generally just more sales going through. Absorption rate. This is going to be basically flipped of what we were just looking at. So this is the percentage that a property is likely to sell. So it's going to be the total number of units available divided by the number of sold units. So this is saying that 2.3% of all available units had sold last week, which isn't very great. This NAR's balanced market range is between, it looks like 3.2 and 4.5. So we're definitely about 1% below that. So like I said, if this continues, buyers are going to be in a really great spot with low priced houses, lots of inventory to choose from, low rates, concessions, buy downs. And if you're a seller, these are things that you really got to consider to make your house better than your neighbor's house, to make sure that it's priced better, presented better, and promoted better. Pending inventory. This is just going to be all the pending inventory on the market. This is going up, which is a good sign. Like I had said before, with the just that general absorption rate, supply and demand kind of thing, we want to see if the listings are going up. We do want to see the pending sales going up. The only thing that does concern me is the actual percentage of closed sales. So as we see here, the pending inventory seems to be going up. The active inventory seems to be going up. However, when we go to closed sales, it doesn't seem to be actually reflecting here in the closed sales. So what that's telling me is either there's a lot of sellers that are taking lowball investor offers, people aren't closing, either buyers are seeing a lot of options available on the market, they get under contract, they're not 100% sure, hey, maybe we cancel this one, try to go get this one. Buyers are definitely not like gung-ho right now. That's kind of what this is showing me. So like the pendings are going up, people are agreeing to contracts, but they're just not closing. So until we see these actual closed sales start to re-increase, that absorption rate, that supply and demand is going to stay similar to where it's at. So the pending sales increasing is a good sign if you're a seller. That means that there's more buyers that are going to be entering the market. However, like I said, with these closed sales, not all of those sales are closing. So just because you accept a contract, the buyer might back out, they might find something else, they might be trying to negotiate multiple properties, it might be an investor that something fell through, they're no longer interested in the property, whatever the case is. But this just shows me that not all of the active contracts are closing. And if you're a buyer, you can use that to your advantage. You know that you're in the driver's seat. Backup offers are even a potential option in this market as well with this percentage of contracts that are falling through. So like there's a house that you really, really like, something that you're really interested in and you want to put in an offer, it's already under contract, go ahead, put in the backup offer. There's a good chance that it falls through. Next thing you know, you're in first position. You go ahead and secure that property. So if you guys have any questions about any of these stats, just generally what this means for you, your situation, whether you're buying, selling, investing, my team and I's here around the clock to help you. You can call us via the phone number down there in the description. You can also click the link in the pinned comments to schedule a call directly on my calendar as well. If you want to work directly with me, or I can transition you to one of our agents from there. So give me a call or text back whenever. I thought I was leaving a voicemail. But thank you guys all for watching. And I look forward to speaking with you all soon. Like I said, all of our information can be found in the description below. If you guys have any questions about any of this stuff, what it means for your situation, you want to plan a call, seller strategy, buyer strategy, whatever the case is, we're here around the clock for you. So thank you all for watching. Be sure to subscribe to the channel, like this video for more content just like this, and I'll see you all next week.